Hi ladies and gents, what we're moving on to today is it's called the purchase ledger control account or the total payables control account or sometimes a payables control account. It's basically like a sales ledger control account, but what we're going to be doing is we're going to be looking at the purchase ledger and all the entries in there. So the big difference in the purchase ledger, obviously the opening balances are normally on the credit side because it's normally a liability for the business. Any individual purchases will normally get recorded on the credit side of an individual customer's account because again it increases the amount of money that a business owes and therefore liability. Our purchase returns, discounts received and bank payments to our customers will go on the debit side because they are reducing the amount of money the business owes, and normally we'd expect to see the balance carry forward on the debit side because the balance carry forward at the start of the next month will normally be an amount of money that we owe. So I've done that for all the suppliers. I've deliberately made an error somewhere, but we'll come round to that in a minute. So we're going to put the total of the monies that we're owed into our purchase ledger control account. Okay, so that's for 1,050, and then we're going to put the total at the end of the month for all the purchases in. And what you'll notice and remember again from the sales ledger control account, the only entry that's done at the first of the month is the opening balance, and all future entries get put on the credit side. Right, purchase returns debit total, I'm going to put that in on the debit side because it's reducing the amount of money we owe. We're not going to pay for anything we've returned. And then I'm also going to put in my discount received total and the total amount that I've paid from the bank. Hopefully now we'll find that it clearly is that the credit side is far bigger than the debit side. So I need to make both totals the same, and therefore I need to put a debit entry in to make it up to 3,000. And that tells me at the start of the following month I've got a liability to these people of 1,800. There's a problem here because that's different to the closing balance total. And that's because I've deliberately made an error and I forgot to put in this purchase of 450. So hopefully now if I put $450 as an extra credit entry in James's account because we actually 450 more than we thought, the totals now are going to be exactly the same. So you can see how it's highlighted an error, and what I've been able to do is to go and look in the day books and compare it with the purchase ledger to find my mistake. Okay, we're going to look now at an exam style question. Okay, first of all, just looking at the answer, very, very similar to a sales ledger control account, but this time everything to do with purchases is on the credit side, everything to do with payments is on the debit side. Okay, just building it up. Well, as with the sales ledger control account, the bigger figure is always going to be on the credit side. It's going to be money that we owe to suppliers. But it's possible that we could be owed some money by some of our suppliers. For example, we returned some goods to them after we paid. We forgot to allow for a discount received and therefore paid too much. Just made an error and paid too much. Purchases, well, they're going to go in, it's quite straightforward, as they would do in the supplier's account. They're going to go on the credit side, it increases our liabilities. And then we've got, coming down here, we've got another distractor. Cash purchases, they don't go in because that entry will be made as a credit entry in the cash book, and it will be made as a debit entry in the purchases account, so it would never ever go into a supplier's account. We've got our payment to credit suppliers, and that needs to go in because it's reducing our debt, as is purchase returns and discounts received. Now in this example we've also said that we've got a return check. A return check is what we've made now, so we might have, for example, forgotten to sign it, we might have forgot to put a date on, there might be some error with the way that we've written the numbers. And because we would have included it in the cash book, as part of our payments, we need to also recognise that we need to send another cheque, and therefore we need to put in as a credit entry. Okay, and then we've got a contra again. The contra is where, in this case, it's going to be where we have got a customer who also supplies us, and therefore what we're doing, instead of sending 2 cheques, we'll compensate and just send, either they'll send us a cheque or we'll send them a cheque for the balancing amount, because there isn't a lot of point in sending the extra paperwork. So put that in, and hopefully I've got it there. Okay, we've got this balance, closing balance of 250 on the debit side. And what that means normally is that the balance brought forward is going to be on the debit side, and therefore we need to put a balance carry forward on the credit side of the accounts. So I've done that. Biggest side is going to be the credit side. So let's see how big it is. 19,550, and therefore the last thing I need to do is put in my balance carry forward at the end of the month, which means that I owe my suppliers a total of $11,150. Then the balance brought forward, and that's pretty much all we need to know for purchase ledger control accounts. So for those of you that I teach, you will have had emailed to you some questions. Good luck with those. Some of you will be quite fortunate, I might have emailed you the answers as well to check them off if you're doing it as a revision exercise. And otherwise, good luck, and I'll speak to you all soon. Bye bye.